Buddy, welcome to another episode of let's call it Cody Underground, the I Am Cody Show. Sending out a notification to some users here. Today we're going to talk stocks, we're going to talk markets, we're going to talk, I'm sure, some politics, driverless revolution, the voice revolution. I'm going to put this sucker on Do Not Disturb. Give me 1 second. I've got to call in to the Trading with Cody conference call here. Boy, it's been a bull market, hasn't it?
This service is provided by freeconferencecall.com. Please enter your access code followed by the pound or hash sign. If you are the host, press star now. Otherwise, please wait, and you will be joined into the conference.
All right, then. I always start off these calls, I guess, with rambling like I just did. But
please announce yourself.
It's C. Diggity Dog, Cody Willard in the house. Welcome to the conference call here, guys. We're going to take questions live. I've got a chat room at tradingwithcody.com that we take questions in, and I'll also pontificate on the markets in general and the headlines and things like that. So, looking at the headlines, first thing this morning, you're going to see either more allegations of sexual harassment and powerful figures being taken down for bad behavior, or you're going to see the stock markets at new all-time highs, or very near new all-time highs. Say that 10 times fast. Keep your tongue from getting tied. The NASDAQ, the Dow at 23,600. Long time investors, if you've been around for 20 years, you remember the dot-com bubble and in the late 1990s. And one of the things that the end of that bubble was famous for, darn near the top of the market came out, not just when AOL and Time Warner merged, but also the fact that there were guys writing a book called Dow 25,000. And I think they were predicting it to happen in like the next 2 or 3 years, maybe 5 years. But they weren't talking about 2017. It's probably 18 years since they wrote that book. The stock market promptly crashed after they wrote the book, of course. And there's, I guess now that you mentioned Time Warner being back then was buying AOL, and now today in the news, AT&T buying Time Warner is in the news, or trying to buy Time Warner. The government is going to step in. What's interesting, I think, when I listen to all of the commentary around and read the articles talking about all of this, a month ago, a lot of the articles and commentary was about Trump and CNN and the battle and the personal battle they were having, and wondering whether that was part of the Justice Department perhaps being hard on this deal. And now that the suit has actually been fired, you don't hear them saying that. You don't hear many people talking about that. But even this morning on CNBC, the commentary was mostly around how astonishing it was that the government, the Justice Department, would crack down on this stuff. And sure enough, they didn't talk about Trump and CNN. They just talked about how astonishing it was. But it does make some sense because, look, the Justice Department, the Department of Justice, has not done its job. I've talked about this for 20 years, how one of the reasons we have such a bubble-blowing bull market is because competition has been whittled away. The consolidation in any major industry, any developed industry, any industry that's got billions of dollars of sales in total, whether it's chickens or semiconductors or cars, whatever, they have consolidated down to the point where there's very few competitors. Margins go up when there's less competition. And the whole reason for the antitrust laws is to keep prices from going up so that giant, powerful corporations can't profiteer on consumers, which, again, if you've got 3 major chicken dealers in the country, then prices for chickens are going to be higher than they otherwise would have been if there were 30 chicken suppliers. I'll grab some coffee here. So I don't know. It doesn't make any sense to me that the Department of Justice would suddenly decide that there's real competitive threats. And this one isn't necessarily like Netflix, Amazon, Facebook. We watch TV and we stream things on these. You can stream the NFL on Twitter sometimes. You can get it on Verizon wireless. I'm not for, look, if I wouldn't be for this merger and acquisition if I were the Department of Justice, but I wouldn't have been for the Comcast merger with GE's Universal, NBC's assets either. I would be a lot harder on all of the consolidation in this country if I were in charge of the Department of Justice. But for the last 30 years under Republicans and Democrats, that has not been the case. There's been free form consolidation, very little pushback from the Department of Justice. Beer consolidation. I mean, what is it? 70, 80, 90% of beer distribution in this country is owned by 2 companies or something. I mean, it's one company has 60% or something. It's ridiculous what has been allowed to happen in mergers compared to what AT&T and Time Warner would be. But politics is as politics does, and you guys know I don't play the Republican Democrat partisan game anyway. I'm just looking at that from the outside as being as an objective and concerned observer as I always am. So you guys on the call here, anybody have some questions? No, I got disconnected from that call. People have not been able to listen this whole time. Try again. Bear with me, please. The whole time I thought I had people listening. Hard to do an interactive live call if I can't dial into the number. What's going on around here? It's a free number. It's a machine that's supposed to answer that. Try one more time.
Message 20. This number is not yet connected or has been disconnected.
Well, that's embarrassing. Good thing this isn't live TV. It's just live streaming.
Welcome. This service is provided by
go.
freeconferencecall.com. Please enter your access code followed by the pound or hash sign. If you are the host, press star now. Otherwise, please wait.
Hopefully there's still some subscribers hanging out in there. Let's find out. Hello, everyone.
Please announce yourself.
Hello, everyone. It's Cody. I'm back. I don't know what happened. I thought you guys were hearing everything I was saying that whole time. Is anybody in here? I know someone's in there because clearly we're not hearing the music that says no one's in there. There's someone else jumping in. Hi and welcome. Hello, everybody. Thanks for jumping in here. Hello. You guys, I had some technical difficulties there. I thought I was on the call and I wasn't. Thanks for jumping in now. If you've got questions, ask away. Those of you who just logged in there on the call. All right. Well, let me just keep going here. We've got, here's, Palo Alto Networks is one of my stocks. It's up 8% today, and I'm getting questions about that. And one of the questions I got earlier was from a longtime subscriber who asked me why a couple of years ago, or I guess probably a year ago. Well, the question is this: Cody, I remember FFIV being a longtime favorite of yours. Which made you move on from FFIV and now you own Palo Alto's? And the reason, Palo Alto Networks, and the reason why, as much as anything, look, FFIV's growth rate has slowed down significantly over the years. I mean, 15 years ago when I was writing about FFIV, the stock was at $25 a share. I was talking about it. I think I wrote a couple articles in the Financial Times and elsewhere about it. And the growth rate back then was 20-30% top line. And nowadays it's running at 2, 3, 5% best. And the company is going to earn 8 or 9, maybe $10 per share next year, and trading at a 12, 13 multiple. But that's because there's very little growth. Meanwhile, Palo Alto, it's in a much higher industry of it's more of a pure play on cybersecurity. And Palo Alto is going to grow 20, 25, maybe 30% top line this year. The stock, they'll earn $5, $6 per share. The stock's trading at twice the multiple that F5 is trading at. But that's because of the growth rate. And when you're growing 30% per year, you're doubling the size of your company every 2.5, 3 years. And you do that 5, 7, 9 years in a row, as Palo Alto and Amazon and Facebook and some of our other companies have done. And boy, you're going to have some growth. That is exactly the case that we've seen. And that's why the stocks are higher, that you have a higher multiple, because the growth rate enables those companies, hopefully, to grow into those multiples. Any questions from you, dear? Oh my gosh, it kicked us off that phone call again. Well, I don't even think I should try it one more time, but I've got people in there. Let's see if it works. Technical problems, never fun. Yeah, I don't know what's going on with 1-800 conference call or free conference call. That's still not dialing. Now it's going to dial and tell me the number's been disconnected or something.
Welcome. This service is provided by freeconferencecall.com. Please enter your access code followed by the pound or hash sign.
I'm bored.
If you are the host,
dialing this
press
number. I
star
can't imagine
now.
how bored you
Otherwise,
are listening
please wait,
to this.
and you will be joined into the conference.
Here's what it is. 15 years ago, you couldn't do live streaming and simultaneous phone
Please
calls.
announce yourself.
Hey, are you guys in here? Hello? I guess we're having problems with 1-800 conference calls. Anybody in here in this chat room? I know you're in here. Say something, or maybe you're all getting kicked off. Funny that a good old-fashioned phone number would break down. It's supposed to be 99.999%, 5 nines reliability, the telecom sector, but alas, no. Well, I did get a couple other questions emailed here. Number one, a couple of questions about stocks, but I had another question that I liked here. Cody, do you ever believe in putting stops on your stocks to prevent losses in case of a big market drop? And never say never. You use the word ever in there, so let's never say ever. But in general, no. Yeah, I don't like to use stops. I don't like to put stops, trailing stops in my portfolio. Too many times I've seen people, I've not done this, I don't use trailing stops, but I can think of a handful of times that I have, and this has happened. And I know lots of people that have had this happen many times over the years. You put in, let's say it's a stock like Qualcomm, and you put in a trailing stop, you bought it at 55, you put in a trailing stop at 53, and one day the news comes out that Apple isn't going to do such and such, and they're fighting back on the royalty payments, and next thing you know, bam, the stock's down to $52 that morning. But as the day wears on, people realize, look, this has been an ongoing battle. It's not that big of a deal. It's not new news. Meanwhile, someone, Broadcom, Avago is trying to buy Qualcomm anyway, so the stock goes back to 56, and you got stopped out. More to the point, I've seen people, I told this story recently at a conference where Advanced Fiber Communications was a stock I owned 15 years ago, and I had a trailing stop in it at like 42, and one morning the markets were down big, and the stock opened at 41.50, and I got stopped out, sold out of my whole position, and over the next 2 years, the stock went up 300%, and I barely got back in at all, much less how much I had owned at the top. So don't do trailing stops with your whole position. If you maybe want to do a small part, if you own 1,000 shares of something and you want to stop loss on 200 shares just to stop some of the pain if it goes down. But look, there's no easy solution to avoiding losses, and there's no easy way to maximize rewards and minimize risks over the long term. Stop losses, trailing stop losses, they are not a solution. They're not an easy solution. There's a time and place for everything, but in general, no, I do not use stop losses. Another question we got here. Palo Alto, Cody, wow. Yeah, it's up 8% today. Cody, you have it as a 9 out of 10 rated stocks. I told everybody 2 weeks ago I thought that thing was about to pop. In fact, if you watched one of these live streams 2 weeks ago, I told you I thought Palo Alto was about to pop, and it was a good short-term trade in addition to being a great long-term investment. And you got a freebie on that. Go to tradingwithcody.com to find all of my best investments and trading ideas. Question here is, Cody, you have it as a 9. Do you think it could be a $1,000 stock in 3 to 5 years? Ooh, let's look at what the valuation on Palo Alto is already. Market cap is already up here at 13 billion. To get to 1,000, we need to go up 7-fold. 7 times 13 is going to put you at $100 billion market cap. Yeah, I mean, this company could grow sales 30% per year for the next 5 years. And that would, that's that maybe a quadruple from here. That puts you about 450, 500. And, in a bubble blowing bull market, who knows? $1,000 a high price target, though. Let's tamper down our expectations a little bit. We've had some great 500% and 300% gains in the last 18 months, 2 years, 5 years at trading with Cody. But let's just tamper down our expectations. Another five bagger. Let's hope for 3. I think that might be a little more reasonable. Next question here. Cody, Verizon deployment of 5G seems like a disruptive threat to cable and an additional $100 billion of revenue for them. Please expound on this a little bit. What's the difference between expound and expand? Very little. At least in regards to communications, talking. Verizon 5G, look, yeah, it is disruptive. And it's not just disruptive for Verizon. It is, I think, the reason why I think Verizon's a great 5G play is simply because they are investing more than anyone else on this. They are not trying to spend tens of billions, $100 billion on content. They spent $5 or $10 billion on buying Yahoo and AOL. But they're spending tens of billions of dollars making sure that their 5G deployment is faster, better, and quicker, and more reliable, and out there first. And that's a great opportunity for them. But beyond that, 5G presents such a disruption to so many things we're doing. And the fact that upstream, downstream, live stream videos, interaction videos, all of this stuff, Amazon Alexa, all of these things are part of, are going to be built. They're going to build new services and features and exciting ways of engaging with these things, with the internet and with augmented reality, virtual reality, who knows what else, engage with people and engage with devices and information and everything else. And that's big for everyone. A lot of different aspects to 5G that will matter. And hundreds of billions of dollars for lots of companies. I don't know if I would model another $100 billion of revenue for Verizon off of 5G, but tens of billions of dollars certainly in the next 5 to 10 years for Verizon are potential for 5G. Woo! Another question coming in here. Blackberry, please explain how its technology is positioned to be such a compelling buy. And I don't think Blackberry is that compelling a buy. I do own a little bit. We've got some gains on it. It's up again today. It's a small position, and frankly, I'm sometimes thinking about taking a little off. Or letting it go. I think I might own too many positions anyway, and it might be one that I painfully might have to let go. But the reason I own Blackberry and the bullish case for it is really that twofold: that they could become a network security Android de facto standard. That corporations that want high quality, high security Androids would use a Blackberry. But and so that would be a bullish case for BlackBerry. And then the other one is that they own the brains underneath most cars, smart cars, versus most smart dashboards, if that's what you're going to call it. I mean, my God, most smart dashboards today are idiots compared to Android and iOS. But BlackBerry is the brains behind much of that, and that's a platform that I hope they can grow off of. But that is something that I think I'm going to have to let go. I don't think that thesis is playing out very well. I think moving beyond the BlackBerry platform is easier than building into it. And I think most car companies know they need Android or iOS systems in their cars. And maybe in 3 or 5 years, you'll have the option. I'll take an iPhone compatible dashboard. Not take, my sister will take an Android compatible dashboard. Here's an email. Great little write-up here today, Cody. Have you been to Eastern Europe lately? Incredible economic progress. Atsiprašau, Panela. Kur yra katedros aikštė? That's my Lithuanian. I have not been to Eastern Europe recently, but I did live in Lithuania once, and I love Eastern Europe. But let's see. Continuing this guy's question. First time in my life, I got to experience a 25 to 100 times currency difference. Somewhere at home, I have 2 forint coins from the early 90s. Now the coinage is 50, 100 to 200, and they are likely to retire the 50s soon, which are only worth 20 cents. Daniel. Interesting. You know, currencies are such an important economic factor. I mean, they are good currencies are relatively good currencies like the U.S. and some of the other developed countries in this world are rare in history. And most people in their lifetimes in the history of this planet have experienced what Venezuela and Zimbabwe have experienced in our lifetimes, which is crazy currency devaluations and suffering because of that. Which brings us, of course, to Bitcoin, cryptocurrencies, and the promise thereof, and why there is such demand and interest in the concept that you could somehow avoid fiat currencies based on political governments. And there's a place for that. 10 years ago on Fox, I used to talk about competing currencies and thought that Warren Buffett could have his own currency, Cody Willard could have his own currency, and Apple could have their own currency. And you do sort of see that anyway. But true cross-border open currencies based on blockchain technology have a place in our world, have a place in our future. For the very reason this guy's talking about. It sucks to be on the wrong side of a 25 to 100 times collapse of your currency. I guess it'd be a 99% collapse of your currency if it's 100 times appreciation of another. 99.9. You get my point. Let's see. Here's another email. Yo, Cody. EXTR continues to roar. What do you think? That's Extreme Communications. I traded and owned Extreme back in 2005 to 2007 or so, and it never went anywhere. And I frankly haven't followed it much. I have seen the stock cross by on my tickers on occasion. I'm watching CNBC or something, and I'll see the EXTR symbol go by, and I think it's tripled recently. Probably all the more reason I wouldn't want to chase it right now. But I'll take a fresh look at Extreme. Who knows? If their growth rate's through the roof and the stock's cheap, I'll find an opportunity. Love good opportunities. Next question is, I've been in and out of Square SQ from the IPO and now have it as a core holding in my financial tech basket. Thoughts? Boy, you sound like a momentum chaser between Extreme and Square. What a tear Square has been on. The fact that Square popped, look, Square is up from 12, right now 47 in the last year. Well, now, just several months ago, just 60 days ago, it was at 30. And then it was almost to 40. And then at 36 or so, they announced that they were getting into the Bitcoin payment business. They were going to work on Bitcoin payments and accepting them and making, again, another validation for cryptocurrencies. But the fact is that Square popped like $10 now. It's at 46, up from 36 in 3 days, 4 days, a week because of this news. And that is a sign of the excesses in this bubble blowing bull market. And I'm thinking near term, this makes me even nervous about the stock market. This reminds me of 1999 dot-com bubble when KTEL announced that they were going to start a website so you didn't have to just order their CDs off of commercials that you heard on TV, that you would actually have a website to buy from, and the stock went from like $1 to 40. Things were crazy back then. This is a little crazy. Square is a great company. To go back to the question, Square is a great company. I should have bought it. It's one of my big regrets in the last year. I saw that thing at 12 a year ago, and my wife and I had a big discussion about it, and she uses it at her office, and I hate my PayPal service that I use for my trading with Cody stuff. And anyway, I missed Square. It's up fourfold since then. Hate that. It's a great company. I've written about it for 2 years now, and I do think it's, I don't know that I'd want to chase it at 47, but if you've owned it for a while and you got it as a core holding, I probably would trim some and lock in some profits, but I wouldn't run or get scared out of it or something. Here's a question. Cody, my portfolio is $200,000. I'm 57 years old. Unless I do things that you would advise me against, parentheses, risky stuff, how am I supposed to be able to have enough to live on if I retire in 15 years? Again, there is no easy answer. I can't tell you that you can turn 200 grand into, what do you need, maybe 2 million to retire in 15 years? Now, trading with Cody subscribers, we've had some stocks that have gone up huge, 10,000%, 17,000% gain on Apple. We've got 5,000% gain on some of our stocks, 500% gain on NVIDIA and some of our others in the last couple of years. And even that is going to be hard pressed to go up tenfold your whole portfolio in 10 years, but it could happen. And that's what the only way that you would be able to do it is, number one, you got to keep working and make, put away. If you've got 200 grand and you want to get to 2 million, sure as heck better be putting away, 20, 30, 40 grand a year. And if you're not making enough to do that, let's just be realistic that you might not get there. You might need to work more than 15 years. Don't overextend yourself and start gambling in the stock market, going crazy, trying to make huge gains. That I've seen so many retail investors over the years blow their portfolios up because they wanted that 1,000% gain in their portfolio to retire, or to be rich, or to be comfortable, or whatever their reason was. And you've got to be realistic about your situation. I will tell you that, you can't go crazy. You should own some Revolution Investing stocks, but if you're 57 years old and your total portfolio is $200,000, you shouldn't have all of that in tech stocks and Revolution Investing stocks, even great ones like Apple and Google. You need to diversify yourself a little bit, and that's going to cap potential gains. And just be realistic and work hard and invest well and buy Revolution Investing stocks. Trading with Cody, we'll have some great calls, I hope, over the next 5, 10, 15 years for you. But know that there's no easy way to have a 10-fold return on your portfolio. That's what everybody on the planet is trying to pay billionaire hedge fund managers to do, and the billionaire hedge fund managers can't do it either. So, I look at my own track record over the last 5, 10, 15 years, and I couldn't be any prouder. because I think I've outperformed just about every hedge fund manager on the planet. I think Trading with Cody subscribers would tell you they have over the last 7 years had a hell of a run. But even that, man, it's just tough. That is the answer to your question. I'm sorry to tell you. Just be realistic. Look, you guys, here's a question about OKTA. I don't know the stock off the top of my head. I think I've answered about it before. I'll have to look it up. AXTI is another one that someone's asking about. Let's see if it's a penny stock. $10, $300 million market cap. Not a penny stock, but it was 2 years ago. I don't know. I'll have to look at the small cap names like that. I'll have to do a little homework, but I will. Trading with Cody subscribers will get an update. I'll answer these questions and send that part out, but I'm not going to bore everyone with me looking them up. See what OKTA is, just if it's a penny stock or not. No, it's not a penny stock either. $30. Oh, it's a cloud company. I have heard of this one. I'll take a look at it. It's a $3 billion market cap. I should know more about it. Can't know them all. Here's another one. Any thoughts on EKSO or other exoskeleton companies helping increase production? Let's look up EKSO. Guys, if it's a penny stock, I'm going to tell you to run for the hills. I don't buy penny stocks. This is a $3 stock. And unless it's a rare example when I end up meeting the CEO and really like him, and like, for example, Axogen is a stock that we've owned that's gone from $4 to $25 now. And that's a rare thing, though. I don't very often like to even try to find penny stocks. So I'm going to tell you right now, Exobionics is probably not going to be a stock I'm going to want to buy. And I think that might be it for the questions. The guy who I just answered the question to about his portfolio being at 200,000 just wrote me back and said, "Thanks, man, got it." And thank you. And it's key. I mean, truly, other subscription services will promise you the world. And, I couldn't be any prouder of my track record. And I think I'll have some more great ideas, but we've got to be realistic. And you got to know that if you're 57 and got 200K put back into stocks and your IRA combined, it's you got more work cut out for you. So, takes a lot of energy to do these calls. I don't know how Howard Stern does this stuff for 3-4 hours a day. Every day. Any other questions? Sorry that the conference call number didn't work. Those of you who tried to call into it, that was a little bit frustrating, but at least we're getting some great discussion going on, and even without the live interaction. Go to tradingwithcody.com if you're not a subscriber. Sign up. You'll become a better investor. Challenge a lot of your thoughts and conventional wisdom, and hopefully continue to find some 5 or 10 baggers. Got some recently that I've been adding. Go there and find out what they are. Headline, as we're looking, what does that say? NASDAQ notches all-time high as it paces Tuesday's stock market advance. Hate to say I told you so, but I told you so 7 years ago, baby. I think I might wrap this sucker up. Thank you for joining. Thanks for the questions. Peace, love, and happiness. Talk soon.